Ladies and gentlemen, today we stand at a moment where history and opportunity converge. For years, silver has been the quiet metal, the overlooked sibling in the family of global commodities, but every quiet force eventually reaches a breaking point, and silver's moment is rapidly approaching. We have entered a period of unprecedented economic pressure, market uncertainty, and shifts in global demand. Around the world, industries, from technology to energy, are consuming more silver than ever before. Supply, on the other hand, is tightening. Mines are struggling to keep up, stockpiles are shrinking, and major buyers are becoming increasingly aggressive in securing their share. When pressure builds long enough, something must give. Silver is approaching a critical turning point, one that has been quietly building beneath the surface for years and only now is beginning to reveal its true intensity. This moment isn't the result of chance or sudden speculation. It is the culmination of long-term economic pressures, shifts in global behavior, and patterns that repeat throughout history whenever a major asset is undervalued for too long. For decades, silver has moved in cycles, oscillating between periods of stagnation and bursts of explosive growth. But each cycle is shaped by the conditions of its time, and today's conditions are unlike anything the world has seen before. Silver is not just drifting toward a major change. It is being pushed there by powerful forces that have been gaining momentum quietly and relentlessly. One of the core elements driving this turning point is the imbalance between perception and reality. Silver has often been overshadowed by other assets, overlooked by mainstream investors, and treated as a secondary metal. But beneath that quiet reputation lies a resource essential to modern life, one whose real value is often underestimated. While the world became distracted by trends in other markets, silver continued to find its way into every corner of the global economy. Its use in electronics, medical technologies, renewable energy systems, and industrial manufacturing expanded dramatically, even as its price remained deceptively calm. This disconnect has stretched to a breaking point. When an asset's real-world importance grows faster than its market value, history shows that eventually the price must correct, often rapidly and aggressively. At the same time, broader economic pressures have been tightening. Global markets are navigating inflation, geopolitical uncertainty, supply chain disruptions, shifting energy dependencies, and intense currency fluctuations. Whenever the financial environment becomes unstable, people naturally gravitate towards safe stores of value. Traditionally, this included gold and other hard assets, but silver, which mirrors many of the qualities of gold, while also serving as an irreplaceable industrial component, stands at the crossroads of both safety and necessity. That makes it uniquely positioned during times of economic stress. Investors looking for security see its role as a precious metal, while industries facing rising demand see its importance as a functional resource. This dual identity puts silver at the center of a powerful convergence. Another pressure point is the long-term suppression of silver's price relative to its historical patterns. Markets can keep an asset undervalued for only so long before reality forces an adjustment, as silver continues to be mined at increasingly higher costs while being consumed faster than it can be replenished. The foundation beneath its current price weakens. Eventually, something must shift. The strain builds slowly, year after year, until the conditions line up for a sudden, dramatic breakout. Those who study these cycles know that the most significant price movements often occur after long periods of suppression, when the market finally recognizes the mismatch between value and price. And now, all of these pressures, economic, industrial, structural, and psychological, are aligning. The world is beginning to notice the signals. Analysts, institutions, and everyday observers are starting to see that the quiet years may be ending. Silver is approaching a moment where its long-term trajectory could shift sharply. This isn't just a possibility, it's a natural outcome of the forces that have been building beneath the surface. The metal's role is expanding, its demand is rising, and its price has been held below its true potential for too long. This convergence is why silver is reaching a critical turning point. It is the result of years of imbalance, rising global pressures, and the undeniable truth that essential assets cannot remain undervalued forever. The calm before the storm is fading, and the world may soon witness the consequences of all these forces colliding. Industrial demand for silver is accelerating at a pace that is reshaping the entire landscape of the metal's value, and this surge is not temporary. It is structural, global, and deeply woven into the technologies that define modern life. For years, silver has played a critical but often underestimated role in industrial development. Yet today, the world finds itself more dependent on silver than ever before, and the reasons stretch far beyond traditional uses in electronics or manufacturing. What we are witnessing is a fundamental shift in how silver is integrated into essential systems, and this shift has created growing pressure on supply. As industries continue to widen their reliance on silver, the imbalance between what is needed and what is available is becoming impossible to ignore. In technology-driven sectors, silver is not just another component, it is irreplaceable. Its conductivity, antibacterial properties, reflectivity, and resilience make it unmatched in performance. This means that even tiny increases in production across major industries translate into enormous surges in demand for silver. Smartphones, laptops, medical devices, and household electronics all rely on silver components to function efficiently. And while these products have been part of global consumption for years, emerging technologies are pushing demand to new extremes. Every new generation of electronics uses more silver per unit, and as the global population becomes increasingly dependent on digital devices, the cumulative demand rises exponentially. But the greatest driver of industrial demand today comes from the renewable energy sector, particularly solar power. Silver is a critical component of photovoltaic cells, the core of solar panels, and no current alternative can deliver the same efficiency. As countries around the world commit to renewable energy goals, the solar industry has been expanding at an astonishing rate. Massive solar farms, residential installations, corporate transitions to green energy, and government mandates have all contributed to a demand surge that shows no sign of slowing down. Every gigawatt of solar capacity requires a measurable amount of silver, and the pace of installations has outstripped what many analysts once thought possible. With more ons pushing toward carbon neutrality, the hunger for silver and solar technology continues to escalate. Other emerging sectors add additional layers of demand. Electric vehicles, EVs, for instance, rely heavily on silver for their electrical systems, charging infrastructure, and battery technologies. As the automotive industry undergoes one of the most significant transformations in its history, silver stands at the heart of that transition. Each electric vehicle contains significantly more silver than traditional vehicles, and with governments incentivizing EV adoption worldwide, production numbers are climbing rapidly. This creates compounding pressure on silver supplies, especially as multiple industries compete for the same resource. The medical field also plays an important role in this acceleration. Silver's antibacterial properties make it indispensable in wound dressing, surgical tools, advanced hospital equipment, water purification systems, and even clothing textiles designed to prevent microbial growth. After the events of recent years, global attention on hygiene, sanitation, and medical readiness has intensified. Hospitals, clinics, and manufacturers are producing more silver-based products than ever before to meet heightened safety standards. These expanding sectors are not isolated. They converge, creating a global network of industries that rely on silver simultaneously. This interconnected demand makes silver one of the few metals whose consumption is rising from multiple directions at once. What makes the situation even more intense is the fact that silver used in many industrial processes is not easily recoverable. Once integrated into certain products, it becomes impractical or uneconomical to reclaim, meaning that a significant portion of the silver consumed is permanently removed from the supply chain. This irreversible consumption, coupled with the rapid adoption of technologies that depend on the metal, creates a supply pressure unlike anything seen in previous cycles. Mines cannot instantly increase production, and new mining projects take years, sometimes decades, to develop. Yet global industries continue to accelerate their consumption on a yearly basis. As a result, industrial demand for silver is not just rising, it is reshaping the market. It is tightening availability, intensifying competition among sectors, and creating the conditions for a future price environment driven not by speculation, but by necessity. The world is building its future on technologies that rely on silver, and that reality is pushing demand into a trajectory that cannot simply be slowed or reversed. The tightening supply of silver and the shrinking of global stockpiles have created a pressure point that is becoming increasingly difficult for the market to overlook. For years, the world has operated under the assumption that silver is abundant and easily accessible, but that illusion is beginning to fracture. Silver mining is not a simple or rapidly scalable process. It requires time, labor, environmental approvals, and significant financial investment. Even with advancements in mining technology, production has not been able to keep up with the accelerating demand from industries around the world. This widening gap between what is being consumed and what is being produced is steadily draining reserves, leaving less and less available to meet rising global needs. Most silver does not come from dedicated silver mines. Instead, it is produced as a byproduct of mining other metals like copper, lead, zinc, and gold. This means that increasing silver production is not as straightforward as simply deciding to mine more of it. If the prices of those primary metals do not support increased output, silver supply remains constrained, regardless of its own demand. The silver market is therefore dependent on conditions that it cannot directly control. If copper mines reduce operations due to economic downturns or environmental constraints, silver production drops as an unavoidable consequence. This structural limitation creates bottlenecks that intensify supply pressure even when demand is rising sharply. Adding to this challenge is the fact that many of the world's richest silver deposits have already been heavily mined. The mines that once delivered large quantities with relative ease are maturing, and new discoveries are rarer and often located in politically unstable or environmentally sensitive regions. Opening a new mine is not a quick solution. It can take 10 to 15 years from discovery to full operation, and many projects face delays from regulations, community resistance, or environmental concerns. Even when new mines finally begin production, the output may be insufficient to offset the growing needs of industries that rely heavily on the metal. Meanwhile, existing stockpiles, reserves held by governments, private institutions, exchanges, and industries are being drawn down at a steady pace. Industrial users, especially in sectors like solar energy, electronics manufacturing, and medical technology, are consuming silver faster than it can be replenished. Unlike gold, which is often stored and rarely destroyed, silver is consumed in ways that make it difficult or impossible to recover. When silver is used in millions of small electrical components, medical applications, or chemical processes, much of it becomes permanently dispersed. The result is a long-term reduction in recoverable silver that further strains available supply. Another critical factor is the withdrawal of large quantities of silver from major market vaults. Over the past several years, inventories in various global exchanges have shown steady declines as industries and investors pull metal out of storage. When more silver is being withdrawn than deposited, it signals that demand is exceeding the available flow of new production. If this trend continues, accessible above-ground silver could fall to levels that spark significant concern, especially for industries that rely on consistent and reliable supply chains. This tightening environment also creates competition between industrial users and investors. In times of uncertainty, more individuals and institutions seek physical silver as a hedge, removing additional metal from circulation. That competition intensifies when industrial consumption is already high. When both sides of the market are pulling from the same shrinking pool, the tension increases dramatically, creating the conditions for a sudden imbalance. The shrinking of stockpiles and the rigidity of mining output demonstrate a clear structural issue. The world cannot easily produce more silver even as demand grows relentlessly. Supply is constrained not by a lack of willingness, but by the physical, economic, and environmental realities of mining and extraction. As reserves diminish and production remains limited, the market becomes increasingly sensitive to even small disruptions. This is why silver's supply situation is reaching a critical point. It is not merely a temporary fluctuation, but a fundamental mismatch between what the world needs and what the earth can currently provide. Each year of rising demand and constrained supply pushes the system closer to a tipping point, one that could transform the market in ways that are swift, forceful, and difficult to reverse. Economic volatility has a way of reshaping human behavior, redirecting capital, and exposing the vulnerabilities of global systems during periods of financial turbulence when currencies fluctuate. Inflation erodes purchasing power, and geopolitical tensions shake confidence. People instinctively seek assets that feel secure, tangible, and enduring. Throughout history, hard assets have played this stabilizing role, and silver, in particular, stands at the intersection of safety and utility. As uncertainty rises, the appeal of silver strengthens, not merely because it is a precious metal, but because it represents something solid in a world that increasingly feels unstable. In recent years, the global economy has been navigating a series of challenges that have collectively eroded trust in traditional financial structures. Inflation, once considered a manageable force, has accelerated in many regions, affecting everyday living costs and undermining confidence in fiat currencies. When the value of money becomes unpredictable, people naturally turn to physical assets that cannot be devalued by policy decisions or sudden market swings. Silver, with its combination of monetary history and industrial relevance, becomes a compelling choice. Unlike purely industrial metals, silver carries centuries of recognition as a store of value, and unlike gold, its lower price makes it accessible to a wider range of people seeking protection. At the same time, global political dynamics have grown more fragile. Trade tensions, regional conflicts, shifting alliances, and energy uncertainties have contributed to a climate where long-term planning feels increasingly difficult. Businesses, investors, and consumers all respond to this instability by searching for ways to preserve what they have. Hard assets become especially attractive when trust in institutions declines or when the future seems less predictable. Silver, being both a commodity and a precious metal, benefits uniquely from these moments of uncertainty. It reflects not only economic caution, but also practical necessity, since many industries cannot afford interruptions in supply. Another driver of this shift is the heightened awareness of systemic risk. The interconnectedness of the global economy means that disruptions in one region can ripple rapidly across borders. A supply chain breakdown in Asia can affect manufacturing in Europe. A political dispute in the Middle East can influence energy prices worldwide. A financial shock in one country can send tremors through international markets. This delicate balance forces individuals and institutions to think about resilience, storing wealth in something physical, something that does not depend on digital systems, political stability, or corporate infrastructure, becomes a strategic form of self-protection. Silver's portability, divisibility, and universal recognition allow it to play that role effectively. Moreover, digital and paper-based financial systems increasingly feel vulnerable. Cyber attacks on banks, disruptions in online services, and concerns about technological overreach all contribute to the desire for something grounded in the physical world. For many, silver represents a counterweight to the abstract nature of modern finance. It is the opposite of a digital entry in a database or a synthetic investment product. It is real, tangible, and immune to certain forms of technological disruption. This rising preference for tangible assets is also influenced by the memory of past economic crises. When stock markets experience sharp declines or when financial institutions face instability, people are reminded of the fragility of intangible wealth. Even those who typically rely on traditional investments begin to diversify. Silver often becomes part of that diversification, not as a gamble, but as a buffer, a layer of protection against unforeseen shocks. On top of this, the media and public discourse amplify awareness of vulnerability. When headlines repeatedly warn of inflation, recession risks, or institutional failures, more individuals feel compelled to act. Psychological responses matter just as much as economic ones. Fear, caution, and the instinct for preservation drive behavior patterns that, in turn, affect demand for assets that promise stability. All these elements, economic pressure, political instability, technological vulnerability, and social awareness, combine to shape a world where people increasingly seek refuge in assets that feel safe and grounded. Silver occupies that space uniquely. It is trusted, tangible, and essential. As uncertainty spreads and conventional financial tools feel less reliable, the shift toward hard assets intensifies, and silver becomes a natural choice for those trying to navigate turbulent times. Multiple market forces are converging in a way that creates the conditions for a sudden and powerful movement in silver's price. And this convergence is not subtle or isolated. It is a synchronized tightening that spans industries, economies, investor behavior, and global supply chains. Markets rarely move explosively from a single trigger. Instead, major shifts usually come from several pressures building simultaneously until the system reaches a point where even a small spark can ignite rapid change. Silver is now entering that kind of environment, where the alignment of independent forces is amplifying tension across the entire market. One of the most significant forces driving this convergence is the widening gap between supply and demand. Industrial demand is rising from multiple sectors, including solar energy, electronics, medical technology, and automotive manufacturing. These industries are consuming silver at a faster rate than mines can replenish. At the same time, silver stockpiles are shrinking. Major exchanges are reporting declining inventories, and mining output remains constrained. This supply-demand imbalance forms the foundation of the pressure. It is a slow-building but powerful force, one that makes the market increasingly sensitive to even small changes in availability. Layered on top of this structural deficit is the growing interest from investors seeking stability in uncertain economic conditions. When inflation rises, currencies weaken, or financial markets become turbulent, more people turn to tangible assets. Silver benefits uniquely from this trend because it straddles the line between industrial utility and monetary protection. As a result, during times of instability, both industrial buyers and investors can intensify their demand at the same time. This is not typical for most commodities. Gold, for example, sees rising demand primarily from investors, not industries. Copper sees demand from industries, but rarely investors. Silver, however, is pressured from both sides, making any surge in interest far more impactful. Another converging force is the global transition toward renewable energy and advanced technology. Solar power alone has transformed the silver landscape, consuming massive amounts of the metal every year. As countries race to meet clean energy targets, solar installations continue to multiply. Electric vehicles, 5G technology, medical innovations, and smart devices further increase demand. When major industries expand simultaneously, the need for silver compounds rapidly. This is not temporary growth, it is structural and long-term, which means upward pressure on silver is consistently reinforced. Financial market behavior adds yet another layer. In times of uncertainty, speculative activity tends to increase. Traders look for assets that appear undervalued or poised for movement, and silver has often been identified as one of the most undervalued metals relative to it. Industrial importance. When speculative interest enters a market already strained by industrial demand and supply limitations, price volatility increases dramatically. Even modest shifts from traders can cascade into larger movements, especially when inventories are thin. Geopolitical tensions also play a role. Disruptions in mining regions, transportation routes, or trade agreements can restrict supply further or create delays that ripple across global markets. Political instability can influence currency values, manufacturing costs, and investor sentiment. All these factors interact with the silver market, amplifying existing pressures. Even temporary disruptions can have exaggerated effects when the market is already tight. Moreover, the psychological component of markets cannot be ignored. When multiple forces build simultaneously, people begin to anticipate movement. That anticipation influences behavior. Investors become more alert. Industries increase their stockpiling. Traders react more aggressively to news. This collective mindset becomes a self-reinforcing cycle where the expectation of volatility contributes to the very volatility people expect. All these forces, tightening supply, growing industrial demand, rising investor interest, global technological transitions, geopolitical uncertainty, and market psychology, are converging at the same time. This convergence does not guarantee an immediate explosive movement, but it does create an environment where sudden price action becomes not just possible, but likely. When so many pressures align, the market no longer needs a major catalyst. Even a minor event can release the tension that has been building. Silver is now in that zone where the combination of structural, economic, and psychological forces is creating the setup for a swift and significant shift that could unfold with little warning. Warning. SS and preparation have always been the defining traits of those who navigate uncertain markets with confidence. When major shifts begin forming beneath the surface, long before the public notices, there is an opportunity for those who pay attention to position themselves mentally, strategically, and practically. In the case of silver, the signals pointing toward a possible surge are not hidden. They are simply overlooked by most people who are distracted by everyday noise. Preparation in this context doesn't mean prediction. It means understanding the forces at play and recognizing the potential consequences when those forces collide. As the world moves closer to a moment where silver's value could change rapidly, awareness becomes not just useful, but essential. Most people react only after the headlines appear. By the time news outlets begin reporting on sudden price movements or supply shortages, the shift is already happening. Markets move quickly, and those who wait for confirmation often get caught in the aftermath instead of the opportunity. Awareness means observing trends early, recognizing rising industrial demand, noticing declining stockpiles, understanding economic uncertainty, and seeing how multiple pressures build together. These are the kinds of insights that allow individuals, industries, and institutions to make decisions based not on panic, but on informed understanding. Preparation also involves recognizing that explosive market shifts rarely occur in isolation. They often happen when a series of converging pressures reaches a critical threshold. When silver begins moving sharply, it will not be because of a single event, but because underlying conditions have been tightening for years. Knowing this allows people to interpret early signs more clearly. A sudden drop in exchange inventories, a geopolitical disruption affecting mining regions, a surge in solar manufacturing, or a spike in investor buying. Any one of these may seem small on its own. But when viewed in the context of a strained supply-demand system, such events take on far greater meaning. Preparation is the ability to understand that context before the crowd does. Another aspect of preparation is psychological readiness. Markets driven by fear or excitement can trigger emotional reactions that lead to rushed, irrational decisions. When silver moves suddenly, whether upward or downward, the surrounding noise becomes overwhelming. People who have not prepared may act impulsively, driven by anxiety or urgency, but those who have taken the time to understand the underlying dynamics remain calm. They react thoughtfully rather than emotionally. This calmness isn't just a personality trait. It comes from a grounded awareness of why the market is moving and what those movements mean in the bigger picture. Preparedness also involves observing global trends beyond the immediate metal market. As the world becomes more dependent on renewable energy, advanced electronics, and secure supply chains, silver's role becomes increasingly critical. Understanding these macro trends helps people see that silver is not a short-lived speculation. It is a resource woven into the foundation of future technology. That awareness provides clarity when short-term volatility hits because long-term, you understanding anchors perspective. Furthermore, preparation means being attentive to the signals others ignore. When experts, industries, analysts, and large institutions quietly adjust their positions or strategies, they do so long before the public reacts. Paying attention to patterns such as increased industrial stockpiling, strategic supply agreements, or shifts in institutional buying can provide hints about what may be coming. These signals are subtle but powerful for those who know how to interpret them. Finally, awareness and preparation mean staying curious and informed. Instead of waiting for the market to impose its lessons, those who stay alert actively seek knowledge, reading reports, studying trends, observing market behavior, and thinking critically about global dynamics. They know that major movements often favor those who are not surprised by them. In the world of rapidly shifting markets, awareness is the first line of understanding, and preparation is the key to navigating whatever comes next. When the broader public eventually realizes what is unfolding in the silver market, those who have been watching closely will not be caught off guard. They will be ready, calm, informed, and positioned to interpret the moment with clarity rather than confusion.